Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Cinco de Mayo, Wednesday, May 5th, 2010. Let's look at some charts. Let's start off looking at the Dow Jones Industrial Average. This is a 6-month chart, each one of these candlesticks being one day. This is today's activity. What we see, we were down, wrong tool, hang on. We were down 59 points. Basically, what I want to draw your attention to is a mistake people might make right here. Remember, I was telling you guys before this really blew up, this is going to be bad. Europe's going to be an issue, okay? They still don't know how bad it is. If you thought subprime companies cause a market crash, well, subprime countries cause a bigger one, okay? And that's what you're looking at. So this little activity like, oh, we're looking like a little tiny weak hammer right here. We might bounce and just return to our bull trend. Forget that. Yeah, don't buy into that at all. I short any up days in the Dow Jones whatsoever. I short any up days in the markets, period, right now. So yeah, that's how I would do that. I wouldn't focus too much on the intraday activity or the little one-day upside like we did back here. We sold off, then bounced back up, then oh, forget that. So anybody that bought back at this day, yeah, they just got owned. Anyway, they should have been listening to us instead of whoever they're listening to. So this little move we got here, we're seeing a little bit of a potential bounce here because they're looking at this 50-day moving average and they're saying, oh, we could find support right here. Don't count on it. And I would look for this to fall much lower. That's my personal opinion, but it tends to be right. Notice the increasing buy volume. We had a comment on yesterday's video. Want to know what we thought about the volume. I see it as being very bearish. Basically, it's higher than the previous days of buy volume. So, and if you look back here, all this move back here, yeah, real weak. All this move back here, real weak. I don't trust any of this upside. I think you'll have a lot more selling, and I'll bet you dollars to donuts we're under 10,000 before too long. This problem is going to be big, people. That's my opinion on the short term. If you look at the histogram here, let me get that right, okay? Histogram getting bigger on the down days right here. Yeah, you don't want to be exiting your short when that's still going on. I mean, if you were actually going to exit a short, wait for it to turn around like you did back here. Okay, when you start seeing that, then you could exit a short if you wanted to, but I wouldn't do it. Not right now, not right here, not with the fundamental problems we're looking at. So yeah, I'd stay short that market, plain and simple. Another way to do this, here, what's what I want you guys to grasp. Today I added to a position in my portfolio. If you follow us on Facebook or Twitter, you already know that. If you go to our website, it's 100% free. You just sign up and you can see what's in my portfolio. You can see my entry points, all that stuff, and my charts, my annotations on that. We encourage you to do that. But yes, today I added to one of my short positions, and let me explain the strategy there. When you're trending sideways, or when the overall market's doing this kind of a number, this little pattern, yeah, you can trade that. You can buy here, you can short here, you can buy, short, buy, and short, and compound like that. Okay, get in and out of different positions as you see opportunity. When the market is doing this, well, wrong tool. When the market does this number, you can't do that, not effectively. What happens is you short up here, which is what you wanted to do, right? This is how we shorted. We shorted on the up days and said, okay, this is the place to be shorting. Now she's starting to break down. Okay, what we do not want to do is try to trade this little minute gain to try to pick up one extra little point on the upside or something like that, because we could end up getting stopped out and unable to get back in, because like I said before, you can only short a percent of the overall stock the broker has long, and as you fall lower and lower, that's happening because people are selling their stock, then the amount of short available the amount of shares available to be shorted decreases. Okay, at the same time, as you're falling lower, everyone starts to realize what's going on. They start adding to the short. So that pool of available shares for shorting dries up real quick. So rather than try to do this play this little game that you could call it wrong. Let's say you think, oh, tomorrow it's going to bounce, and it doesn't. Instead, it just does this number. You just missed some money. I mean, just plain and simple. So don't risk it. What I'm doing is as she falls, the lower she falls, I'll add to it. I'll add to my short all the way down and keep doing that and keep doing that. And when I see a bottom sign start to show up, I'll just draw a little uh, stop loss limit right close to my last entry point, and then whenever I do get stopped out, let's say she just keeps falling and I'll keep lowering that stop loss limit, sooner or later I will get stopped out. When I do, all of these shorts along the way will have compounded and made a nice little gain. That's how I'm going to do that so I do not lose my position, okay? I don't know if that makes any sense to anybody, but if it doesn't, don't worry about it. Go to the website. It's free. You can see what's in my portfolio. You can see exactly what I'm doing, and you'll learn along the way. Okay? All right. And remember, there's different techniques for different market scenarios. Okay? Right now, the problem we're seeing in Europe is so big. Think about this. The subprime issues we had here in the U.S. that Europe noticed and basically caused the flame up here. Um, drove our markets down substantially. And I was at the time short dries at about 80 bucks a share. I thought when it was happening, man, I was up like 30, 35%. I can't remember the exact numbers, but I was up a nice little chunk of change really quick. And I thought, well, I'll trade out of it and then get back into it. And guess what? Couldn't do it. Dries, I think, is trading like 5, 6 bucks a share now. Okay, that's what you don't want to miss, all right? And the problem we're having in Europe is much larger than the subprime companies that we have in the U.S. These are subprime countries, okay? This is going to be bad. So go back and look at the 1930s. You'll get an idea of what we're looking at here. So yes, I'm short and fearlessly so. Let's look at our disclaimer. As always, we got to show you this disclaimer to keep the SEC off our back. The information provided here is our opinion only. Read it and weep. I'd like to thank every one of you guys right now for what happened last night. Last night we crossed 100 subscribers on our YouTube channel. We could not have done that without you guys referring your friends and sharing our videos on Twitter and Facebook and all over the internet. So thank you very much. I appreciate that. Please keep it going, and we're going to keep working our tails off to make you money. God bless and enjoy the evening.